It's Monday, June 27th, 2022. Markets across the board down today. And I want to talk about a few things. And one point I want to bring up is everybody has looked like a genius in these markets while the markets were going up. And we're going to find out that a lot of these analysts, economists, people that had all the answers, people that everybody believed what they were saying, we're going to find out that they were very, very wrong. It's easy to look like a genius when everything is going up, especially even in real estate. How many real estate agents look like a genius? They're selling everything, getting $50, $100, $200,000 over listing price. Everybody looks like a genius, but that is all changing. And I believe that these markets are in severe trouble no matter what the Fed tries to do now. We're going to see rallies, we're going to see days where it goes up, but we're going to see lower highs and lower lows coming to these markets. They are running out of tricks, ladies and gentlemen. This recession that everyone is talking about happening in 2023, 2024, it's happening right now. I think that by the time we hit 2023, we're going to be in a depression. That's my thought. But we're going to find out who the real geniuses are. We're going to find out who was right, who was wrong. And we're going to find out how strong the consumer is and how strong these markets really are. This whole thing is coming to a head, and I hope all of you are preparing for it. I want to share a few articles with you today. Wall Street layoffs likely ahead as two-year hiring boom turns to bust. Capital markets revenue has fallen as JP Morgan, their headcount has dropped 13%. Goldman Sachs, their headcount dropped 17%. Morgan Stanley, their headcount has dropped 26% in the past 2 years. When banks have a revenue problem, they respond by getting rid of people, by ripping out costs. And those costs are jobs. And we're going to see more layoffs, I think, in literally every sector across the US. It's going to be in real estate. It's going to be in banking. It's going to be in tech. It's going to be in labor, construction, trucking, you name it. Layoffs are coming by the millions. And I cannot reiterate and repeat this enough. You got to be preparing for this storm. Bank employees seem to have gained the upper hand. They had record bonuses, multiple rounds of raises, protected time away from work. They were even given Peloton bikes. Now it's over. These people, I think, are going to begin to realize that they were actually unprepared for what is coming. The people in the banking industry, many of these people just sheep, not prepared for what was about to happen to them, losing their jobs, not prepared for the long haul here. You must be prepared for the long haul. This is not a sprint, ladies and gentlemen. This is a marathon. And this is going to happen, as I said, to a lot of different sectors across the U.S., not just banking. But take this article as an example of what is happening right now, what's been happening in the banking sector. It's going to happen in most sectors, if not all sectors across the U.S. Really, when you think about it, nobody's job is safe. And that's how you got to think right now. Worst case scenario, if you or your spouse lost a job, what would you do? Are you prepared for the long haul? Do you have 6 months of expenses and mortgage payments put away, rent payments put away? Can you survive 6 months if you or your spouse lost a job? Here's another one on CNBC. 58% of Americans are living paycheck to paycheck after inflation spike, including 30% of those earning $250,000 or more. You know, when you read this, and I think the number is much higher, I would say that at least 70% of this country is living paycheck to paycheck. And there's other articles to validate that, but we're just going to go on what CNBC is saying today. 58%, nearly 60% of Americans living paycheck to paycheck. How in the world do we avoid a housing crash, or how do we avoid an economic crash when 60% of this country is living paycheck to paycheck while they are piling up record amounts of debt. Consumers, it says, are struggling to afford their day-to-day lifestyle. And too many people now just cannot give up their lifestyle. They will not sacrifice their lifestyle. They will not downsize. And they're going to get themselves into very, very big trouble. They're relying more on credit cards and they are carrying higher monthly balances, making them financially vulnerable. And they are very vulnerable because they're not thinking about the worst case scenario. They're not thinking about an event taking place or an emergency taking place. Transmission goes out, alternator goes out, you got to go to urgent care for something, it's $500 there. Most people have zero money saved up and they're relying on the credit cards. And if anything happens to that line of credit, if they begin to, if a credit card company comes out and says, hey, we're cutting your line of credit from $5,000 to $2,500 or $10,000 to $5,000, and they start cutting lines of credit, people are going to be in very, very big trouble. And you know, people will tell me that, oh, the restaurant was busy last night, the resort was busy over the weekend, you know, people are shopping, the stores are busy. How are they doing it? Many people now are solely reliant on credit cards, and they will not adjust their standard of living. They will not adjust their lifestyle. They will just use that credit card to go out this weekend, go to the resort, go out to dinner, and live like nothing's wrong. But the day of reckoning for these people is getting closer and closer, and you do not want to be one of these people. You do not want to be carrying a credit card balance, especially a large credit card balance. And you do not want to be one of these people that believes, well, I'm going to just continue to live my lifestyle because in a few months, everything's going to be okay. I'm watching the television. The economists say that this is going to improve. It's getting better. There's already signs of recovery right now. So I'm just going to continue doing what I do. That is going to be a recipe for disaster. That is a terrible, terrible strategy, one that will fail. Pending home sales post surprise increase in May, likely due to brief pullback in mortgage rates. So rates did pull back a little bit in May, slightly, and this accounted for a slight 0.7% uptick in pending home sales. But here's the downside. Pending home sales were down 13% in May compared to May of 2021. Think about that, down 13%. I think we're going to see a lot of trouble coming in housing. That's my opinion. Just, you know, look at the data, look at the amount of inventory coming, new home construction, and you look at some of the data right now in many cities across the country. They're down double digits. Sales and pending home sales are down double digits right now, and we have yet to see things collapse. We're going to see millions of layoffs. We're going to see these markets at some point really begin to get crushed. Yes, we will see rallies. We're going to see, in my opinion, lower highs and lower lows. And I do believe it's very possible that one day we wake up and we turn on the television and we go, what in the world is going down? What is going on? Markets are going to be so far down. They are going to be absolutely crushed. This has been a death by 1,000 cuts. This economy, this stock market, but we are beginning to see things accelerate. But I do truly believe that we will wake up one day and we are going to see the gas pedal pushed all the way down. We're going to see a serious acceleration in the stock market, in the collapse of the market, and we're going to see an acceleration in the housing collapse, bond collapse, you name it. There are so many bubbles right now, and there's so much danger out there, and this is why me personally, and I don't give financial advice, as you all know, myself personally, I am trying to protect the wealth that I have right now. I am not gambling, I'm not speculating, I'm protecting what I have right now, and I think you have to be really tactical and strategic right now. This is a chess match. This is a marathon. It's not a sprint. You've got to really be paying attention to what's going on. I was talking to a friend of mine yesterday and he said, how could you not be paying attention to what's happening right now? If you have a 401k, if you have a pension, if you have any amount of money in this market, how could you not be paying attention to what's going on? But they're telling you not to even look at your 401k at this point. It's so bad. But they don't want you to pay attention. They just want you to turn on the television, listen to these people in these $3,000 suits telling you that things are going to get better tomorrow, next week. You should be buying in this dip right now. This isn't even the beginning of the real dips, ladies and gentlemen. We're going to see things that we never thought humanly possible in these markets. We're going to see dips that people are going to be shocked by. But unfortunately, most people at that point won't have money to buy into the real dips because they will have lost all their money, or many have already lost their money in these markets, in these Ponzi schemes, in these cryptos, and they're penniless right now. And by the time they wake up, they're going to be broke. And that's when the real opportunity and the real sales are going to come to fruition. Another article on CNBC today, UiPath to cut 5% of its workforce as part of restructuring plan. More bad news. UiPath is a global software company that makes robotic process automation software. So we're seeing more problems in tech. Year to date, they're down 51%. Here's another one. Crypto hedge fund at center of crisis faces risk of default as deadline to repay $670 million nears. It says right here, Three Arrows Capital, a crypto-focused hedge fund, has to meet a deadline on Monday to repay more than $670 million in loans to Voyager Digital or face default. Well, here's the update. They did not make that payment today of over $670 million, and this means they have defaulted. So more bad news in the crypto world. Here's another one. This is the Wall Street Journal. More hedge funds are betting against Tether as crypto melts down. Tether, the world's largest stablecoin, many now believe that the health of this company, of this crypto company, this stablecoin, is in jeopardy. And this is becoming more and more of a growing trend in the crypto world. Again, Tether, the world's largest stablecoin. So while we're talking about cryptos, let's take a minute and just talk about Coinbase. Coinbase, I think at its high was around $425. Today, it's trading at $55. There's rumors and speculation that they could be filing bankruptcy. If you have money sitting in Coinbase, what happens if they file bankruptcy? Well, I'm told that you're treated as a bondholder. You may have a very difficult time getting your money. It may be time consuming. If you do get it, maybe you get 60 cents on the dollar. So I don't know. This is something that I think people in this industry have to be thinking about, especially if you have money in something like Coinbase. The news is not good. And how long is it before people go, hey, I'm just out. I'm cashing out of this. There's just too much risk now. And I think people are beginning to figure out that, yes, the blockchain technology has a lot of advantages, but the crypto itself is backed by nothing. And people have money invested in these cryptos. They're trading in things like Coinbase, and now there is speculation that they could be going down. They could be heading into bankruptcy. So how many people just go, hey, maybe today I'm selling and getting out of this, and maybe you're buying into it. Do what you want. I hold none of this stuff. I don't believe in it. If you don't hold it, you don't own it. But again, so much talk today about what's happening in the crypto world, but you got to start looking at the worst case scenario if you're in crypto, worst case scenario if you're in these markets, worst case scenario if something happens to the dollar, something happens to this economy. What is your backup plan? And me, I think this is a time to get back to simplicity: food, water, gold, cash, and a mental mindset. That's what I'm doing. That's just me. That's my opinion. CryptoWorld.com. El Salvador's $425 million Bitcoin experiment isn't saving the country's finances. The Bitcoin experiment has gone wrong. And I think that the Bitcoin experiment, or really the crypto experiment for a lot of people, has gone very wrong. And these people, and I have to go back to this, that did cash out refis on their homes to jump in and buy Bitcoin at 50, 60, $68,000, $69,000. What are they thinking today? I mean, they've got to be panicking at this point. This could get a lot worse. The government's Bitcoin investment in El Salvador has been cut in half, and the country needs a lot of cash fast to meet its upcoming debt payments of more than $1 billion in the next year. El Salvador's financial problems or economic problems were bad before all this. Now they're much worse. And just think, if Bitcoin goes down further, El Salvador's economy goes down further. El Salvador's economic growth has plummeted. They owe a lot of money, ladies and gentlemen. And this is a perfect, really an analogy of what a lot of people right here in the US did. People did cash out refis on their homes. They used their credit cards. They used their stimmies, and they went and they gambled in something. And now it's plummeting, and people's own economies, their household economy is plummeting, and they're holding something now that is worth 70% less than it was at its all-time highs. And yeah, okay, you bought it at 50,000 and today it's worth 20. I mean, how do people recover from this? And so again, it's just really another analogy of El Salvador, and it's happening now in probably millions of households here right now, where people really bet on something that they didn't really know a whole lot about. Now, you may be accused of not knowing a lot about crypto. I'm accused of not knowing a lot about crypto, but I do know a little bit about money. I do know a little bit about history. I do know a little bit about Ponzi schemes. And I do know something about holding something, and if you don't hold it, you don't own it. I like having access to my money. I like having access to my assets. I have a credit card that I have to use when I travel, but that's about it. I don't hold a balance, zero balance on my credit card, and I don't believe that gambling in some digits on a screen is going to give you a life of prosperity. You know, we've come to this time in society where people just want to buy a lottery ticket and ride off into the sunset. People just want to buy into one of these Ponzi schemes with $1,000, and they expect to make $10 million or $100 million on pure speculation. People don't believe now that, you know, innovation and hard work and producing something is how you acquire wealth. People just believe that, like playing a lottery, just playing a slot machine in Vegas or playing a Ponzi scheme crypto is going to make them rich. And it worked for a couple people, but a very, very few. And the people at the beginning and the people at the very top who got in very, very early made a lot of money, and they got out, and they have now left everybody holding the bag. Now, we'll see how it all plays out. I could be completely wrong. I know that there are people out there holding a lot of crypto, and they now have to believe in this and hope for this because they're so far in, so deep into the cryptos, just like so many people who are so deep into the stock market, they can't get out. They're addicted to gambling, and so I'm always going to be wrong to them. But I'm still holding my money. I can still access it quite quickly. Gold has been holding steady. It hasn't gone down 70%, I can tell you that. Holding cash, that's losing purchasing power, but I'm taking the gamble that the stock market is going to go down 50+%, and that those dollars will have purchasing power, and they're going to buy a lot of stocks. But that's my strategy. Those are my thoughts. I could be completely wrong. Let me know your thoughts. Comment down below. Are the cryptos going to recover? Is the stock market going to recover? Can the Fed save the stock market at this point? I think the Fed's in big, big trouble. I don't think there's any way out of this. Go ahead, reverse course, print a lot of money, bring back QE, and see what happens. It's going to be much worse doing that than raising interest rates aggressively and causing a depression in America. The hyperinflation will be much worse and will last much longer than the Great Depression in America. So pick your poison, Fed, pick your poison. Either way you slice and dice it, this thing's going to be an absolute mess. And you must be prepared for hyperinflation. You must be prepared for an economic collapse, because I think both, it's quite possible we could see both. I'm going to leave it there today. God bless all of you. Share this video. Give it a thumbs up. Make sure you subscribe. And I look very forward to speaking with all of you very, very soon. God bless.